High of the day was 10,604, which means we're about 30 points off the day high.
Federal Bank ending with a gain of about 4%. A decline in crude prices pushed aviation stocks higher, so jet up nearly 10%.
Bulls continue to gain lost ground. Sensex gets back above 35,000, gaining nearly 300 points. Mid-caps outperform. PSU banks lead the surge, with that index gaining nearly 3%.
Infosys revenues beat estimates in the second quarter with a 4.2% constant currency growth. Margins miss expectations, falling below 24%, even as the company secures large deals worth over $2 billion.
Federal Bank rallies close to 8% after it reports a stable set for the second quarter. ICICI Bank gains over 2% after the Reserve Bank approves its new Managing Director and CEO, Sandeep Bakshi.
Hathaway Cable and Dead Networks gain in trade on news that Reliance Industries may pick up more than 50% stake in each of these companies. The deal announcement is expected as early as tomorrow.
And Future Retail gains 14% after CNBC TV 18 reported that Amazon may soon buy up to 8% stake in the company. Sources say the deal is likely to be signed in the next 2 weeks. Well, those were the top 5 headlines from Dalal Street on a day which resembled 2017, just up and away. Welcome to Markets Today Talk Back, the show where we wrap up all that happened in the 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. Over the next 30 minutes, as you said, we will talk about the stories which define the day. Our guests will take your questions. Joining us today to answer your questions on stocks, sectors, everything is Prakash Diwan on fundamentals. We have Mitesh Thakkar, who is joining us on the charts. Gentlemen, thanks very much, both of you, for being with us here on the show. As always, we begin by spending 2 minutes odd talking about how the day really panned out, how it began, what were the cues, and how we finally closed. Lata.
Well, the day started actually positively. Asian markets were not doing too badly despite the fall on Wall Street. But what was icing on the cake for us was the September trade deficit numbers, which came after market hours yesterday and led to a recovery in the rupee from 74 plus to 73.80 thereabouts, and the bond yields had fallen to 7.92. So we started off with all those positive cues. Early morning didn't see the rupee and the bonds do much, but the stocks were still opening in the green. We had a fair gain of about 250, 300 points on the Sensex as well, with the mid-caps outperforming. But around noon, there was a big bonanza in terms of crude moving even below $80. That pushed the 10-year yield even below 7.9. I mean, who would have thought 7.89 would be possible on yields? That led to an all-round rally. Of course, it was the banks which had a lot of the gains, especially because they had Federal Banks and South Indian Banks numbers looking fairly decent. At least the big bad word NPA was not dominating headlines. But all sectors did well. It's only the NBFCs, despite decent numbers from India Bulls, the market is still a little worried about that sector.
Now, you talk about sectors. So, I mean, the top gaining sectors were public sector banks, small cap. The small cap index itself was the second big sort of index which gained the most. And the energy sector ended high, and you'll find out soon why. RIL is the reason. I mean, Reliance was the top Nifty gainer, 2% plus gains. There was BPCL following closely behind, and that basically tracked the fall in oil through the course of the session. Lever was higher, and then there were the banks, ICICI, Axis, HDFC Limited. I mean, they came in with a big support. Broader gains, you know, so HEG, big gains. Look at Federal Bank, as you pointed out. Jet Airways was up almost 8-9% by close. Actually, Indigo was the other one. SpiceJet did quite okay. So these oil themes, it showed up in a variety of ways. Tire companies, for that matter. Escort, South Indian Banks, MCX, Future Retail, Aptech, Coffee Day. Rupa was up 20%, a limit up on pretty large volumes. It had fallen to about 250. It's back at about 320 or so today. And in the broader market, there were some losers as well. India Bulls Housing, there was DHFL, which was lower, Tata Communications, Apollo Hospitals, there was something like a Balrampur. Actually, Sugar, the entire pack came under some pressure. Nothing large, but between 2 and 5% cuts there. Lata.
All right. Well, let's find out from our guests what they have made of this rally. Sensex above 35,000. First to you, Mitesh. I mean, now that we are close to 10,600, is it good to go long? Is there a clear run now for the next 200?
Not now, Lata. I think very clearly, given the fact that we've had a rally starting from 10,200 and it still looks like more of a pullback rally. This may not be the best point to enter. I think, in fact, till today morning was the last entry point when I said that getting past 10,550 should add to the strength, and you can possibly add more to your long positions, or you want to take a fresh, can be bought afresh with a 30-point stop. The first target should be around 10,630, and in case we cross that, 10,700, 740 should be the upside range in the near term. So while there could be some more upside drift, I don't deny that, but I think on the upside you will see, as the 50-day average, 100-day average and the weekly averages catch up, I think around this 10,700, 750 zone you will expect a lot of supply. Also that will retrace about 38% of the fall. So I think around those levels I wouldn't be really keen to take long positions. Therefore at this point in time, not the best level to enter, but if you get a 50-point dip, maybe yes, then you can again go along with a 30-point kind of stop and look at 10,700 as your near-term target.
Okay, so that basically sets us up as far as markets go. We move on to the second story of the day. Infosys has beaten expectations in the second quarter with a 4.2% constant currency growth. This is higher than what was expected. Margins, though, have missed expectations. They fell below the 24% mark, even as the company continues to win large deals. They won large deals worth about $2 billion in the quarter. Rima is here with the breakdown of the company's second quarter performance. Rima.
Well, Infosys has reported a big beat when it comes to revenues. Their dollar revenue growth has come in at 3.2%. In constant currency terms, it's a growth of 4.2%, higher than estimates of 3.2%. And that's actually better than what TCS had reported, which was a 3.7% growth. So the big positive is the revenue beat. But on the flip side, there is no margin improvement. We had that 4.5% rupee depreciation in the quarter that would have boosted the company's margins, but it's not reflecting in the numbers. So margins are flat on a quarter-on-quarter basis, and that is a big disappointment. So what the company said is that the INR weakness benefited their margins by about 80 basis points, plus an increase in pricing. The on-site miss benefited their margins by another 70 basis points. Net-net, the benefit to the margins was 150 basis points, which was eaten away by the wage hike revision, the steps taken by the company to arrest their attrition, as well as higher subcontracting costs. So net-net, margins were flat. Profit has come in line with expectations at close to about 14%. Their FY19 guidance has been maintained, so constant currency revenue growth guidance at 6 to 8%, margin guidance at 22 to 24%. Again, there is a bit of a disappointment on the margin front. The other big positive in the numbers this time has been the significant pickup in their deal wins. So deal wins hit that $2 billion mark for the first time ever, a significant pickup compared to that $1.1 billion run rate that it had in the prior quarter. And if you look at the vertical or the geographical breakup, largely broad base. BFSI picked up. It was soft in the prior quarter, but this quarter it reported a 5.8% growth, and the management indicated that the demand environment is stable, quite good in North America and strong in continental Europe. So net, just to summarize, beat on revenues, strong deal wins, but on the flip side, there is a disappointment on the margin front.
So those are the salient points from Infosys. Prakash, come in on this. You can squabble about the margins, but it's a fairly good top-line performance, and most important are the deal wins, $2 billion. How should the street react?
No, absolutely. So I'm not squabbling on the margins at all, for the simple reason, it's after many quarters that Infosys has finally started giving us growth, which is significantly better than what we've been penciling in, and
huge deal wins.
Huge deal wins, and that never comes with great pricing. Remember one thing, when you have a go-to-market strategy,
invest. Okay.
Yeah, you would, and the benefits of that would start coming in the subsequent quarters. Now, if the management commentary does indicate that they've the only thing that remains a bit inexplicable is why the rupee depreciation has not led to a higher revision on the guidance. Now, which means that they're probably getting a bit conservative, under-promising, and not building up expectations that the second half will be very promising. Which means the stock would only do well and not move down from here. And given the fact that relative to TCS, it's the metrics look fairly better, I think there could be a little bit of money shifting in from TCS to Infosys in terms of sector allocations to the heavyweights. So wouldn't be surprised if Infosys actually starts chugging along slightly better than what it has done in the last couple of weeks.
Mitesh, you want to come in quickly? How is Infy set up?
So, last few days we have seen the IT pack particularly come under some kind of profit booking and pressure, and I think Infosys has also dipped from levels of around 750 to about 660 and then tried to bounce back. My sense is that the near-term trend is slightly negatively biased, so upside should be capped around 720, 725. And it will be very difficult for the stock to get past those levels. While there's a good chance that we might actually retest the recent lows of 660, maybe make a fresh low around the 640 mark. So I think slightly negatively biased. Once the results come in, and if there's nothing spectacular, I'd be more comfortable selling call options or even into buying into put options. Trying to looking for the stock to see and correct to the levels of around 640, 650 zones.
For the moment, the trend is your friend, Mitesh. The rupee has strengthened so much, 73.5 for a dollar compared to 74.5 last week. So I guess there could be some near-term headwinds, at least no tailwind from the currency. Now to the third headline from Dalal Street today. The stock of today's trading session really was Federal Bank. The stock rose almost 8% after the company reported a stable set for the second quarter. Strong loan growth was what drove the bank's earnings. Abhishek is here with the details.
Federal Bank reported a strong set of numbers on the back of strong loan growth that it saw. So the loan growth coming in at 25% versus street expectation of being under 20% actually drove the earnings for the bank, and therefore it was more than our poll. Coming on to the loan growth at 25% plus is the highest in last 4 quarters. That drove the net interest margin, and over the last 2 to 3 quarters, the net interest margin has been inching up for Federal Bank. So the net interest margin improvement actually led to operating profit growing in double digits for the first time in 3 quarters. So over the last 3 quarters, the operating profit growth has been 7%, 8%, and this time coming close to 20%. Now with slippages under control and the restructured book under control, the asset quality was largely under control for Federal Bank. So the gross NPA came in at 3.1% versus 3% on a sequential basis. So the net interest income of the bank was 1,022 crores. That compares to our poll of close to 998 crores. Now with stable asset quality and strong top line growth, the actual net profit came in at 266 crores versus our poll of 238 crores. So overall, the street was happy with these numbers, and going into the results, the stock was under pressure, which after such good numbers saw an uptick of 8 to 10% in trade today.
What a relief not to speak about NPA.
And particularly, Latha, in the case of Federal, because of the Kerala floods, I mean, there was a lot of concern about asset quality, but, well, nothing. So, I mean, the recent low on Federal Bank was 68, and it's come up from those levels. We've got a question. Rajshri is writing in. We've got 1,200 shares of Federal Bank, which she bought at 80 rupees a piece. So price is actually pretty close to where she bought it at. Wants to know how the sort of stock is set up, really, how the business is looking. Prakash, how would you weigh in?
So I think she's waited for a 15% drawdown to get over with, and there's no reason to now worry about it, because you know, if things improve from here on, at least the downside is much more limited than what it can give you as offer you as an upside. So just keep the faith. You withstood the tougher times. Now are better times coming ahead of you. And classically, banks like Federal, which report numbers early and which are maybe not very large in size, also are almost bellwethers for the stressed out sector to kind of, you know, do. And then there, if the NPAs are not bulging out of this thing, the books, there means there's probably some sort of a bottoming out on the NPA cycle. Now, how soon growth comes in is what the challenge is going to be for a bank like Federal. Okay. So, but stay put. Don't worry, you'll probably get better than your price very soon.
Yep, I'm sure their growth will not be as much constrained as some of the capital-constrained public sector banks. Okay, beyond that note, we have to take a break. But stay tuned. Our experts are going to be with us and answer all your stock questions. Back in a jiffy.
Welcome back. You're still with us here on Markets Today Talk Back. We're wrapping out the day's events, taking your questions. Prakash and Mitesh have been answering your questions as well. We move on to the fourth story of the day. We had stocks of cable TV companies, Hathway Cable and Den Networks, which saw surges. I mean, this after sources told CNBC TV 18 that Reliance Industries is planning to buy a controlling stake in these companies. The announcement of the deal is expected to come in by tomorrow. Nisha is here. She's been tracking this deal and she's got the details. Nisha.
The cable TV sector has been itching for consolidation, and Reliance Industries with its RelGeo is the new entrant which is acting as a consolidator. Sources with direct knowledge share with us that Reliance Industries could be announcing the buyout of both Den Networks as well as Hathway Cable along with its results on October 17th, and the structure will be such that first it will be a controlling stake buyout into the company through fresh equity issuance, which will then trigger an open offer. So Reliance Industries could land up owning over 70% stake in both Den and Hathway. It is likely to be around the current market price and may not have much of a premium to it, is what we gather. As far as impact is concerned, Reliance Jio will gain in two ways. First, the subscriber base, the access to 20 million subscribers. On the other hand, the last mile connectivity is also extremely critical, which comes with Den as well as Hathway, who have a right of way. Also remember that their subscriber base are premium subscribers, and therefore the ARPUs will also improve. But one thing to remember is that most of their subscribers are on video TV basis and not high-speed broadband, and that's the area which Reliance Jio will look at really beefing up. So that will be gradual, will need a technological change from the present technology that these companies use, and also by integrating the service offering to their various consumers as well. But nonetheless, it is going to beef up their overall portfolio and the larger base, and this is going to turn on the heat on the competitors like Airtel, Tata Sky as well as Dish TV.
All right, thanks a lot for that. And now for some questions. This is a question tweeted to us by Rahul Merchant. He wants to know whether it's a good time to buy Reliance. Was my question as well. Well, first to you, Prakash, and I'm coming to Mitesh as well.
It is, and a disclosure is I do have a position in this name, and you know, it's one more engine that's finally firing. You have retail doing well. You have telecom, which was expected to have kind of, you know, reached a steady state, but this could fire up the expansion plans on the FTTH, and of course, petchem refining don't disappoint as well. So I mean, you know, notwithstanding some inventory losses here and there on the refining side, but I think that's more than priced into the stock. And Reliance, you need to look at as a secular long-term trend. It's not something which is a quarter-on-quarter kind of a thing. So if you were to buy it for the next couple of years, then definitely it makes a lot of sense, even at these levels. In fact, it's given you an opposite. You know, today it was up about 2.5% from the lows, but of late it's been giving you that very valid entry point of sorts, where it doesn't look pricey enough.
Okay. Well, Prakash, more disclosures from us than you. Reliance is the company that owns the channel you're watching. But I do want a chart view as well from Mitesh. Mitesh, the big thing is tomorrow are results after market hours. So should one trade the stock at all tomorrow or just wait for the numbers?
No, trading wise, I don't think, Lata, it's a good idea to trade before the numbers. Typically, I think, you know, given the fact that you'll have an event. But otherwise, I think if somebody wants to invest, I would be very comfortable doing that. I think the stock did correct to about levels of 1,020 and odd. I think that was a big long-term support area. So the downside should be capped around there. It might take its own sweet time getting past 1200, 1210 again. But once it does that, then I think the stock could again get into a short to medium term uptrend, and we could see a higher high coming in over there. So for the timing, it might so happen that 1200 but might be a cap in the short term. But I think eventually after a few weeks of consolidation, I do expect much higher levels.
Okay, so can put money in for investment. We move on to the last story of the day. Future Retail was the other star in today's trading session. The stock rallied over 14% after sources told CNBC TV 18 that American e-commerce giant Amazon is set to pick up to 8% stake in India's Future Retail. Future Consumer was the other stock, which also, by the way, ended sharply higher. The announcement, the deal signing is expected anytime now, and an announcement within the next 2 weeks or so. Priya is here. She broke that story, and she's with us with more details. Priya.
Well, after 8 months of negotiation, we understand that the Future Retail Amazon deal has entered its last lap. Now, the deal is likely to be signed over the next 2 weeks, is what our sources tell us. Now, tech giants, including the likes of Google and Paytm, had expressed interest to buy a stake as far as Future Retail goes, but Amazon is likely to have emerged as a front runner, is what our sources tell us. Now, just to give you a specific on the deal, about 7 to 8% is likely to be the kind of stake Amazon is looking to buy as far as Future Retail is concerned. concerned. And the companies are in final stages of preparing an agreement. They could also look at including some exclusivity clauses as a part of this overall agreement. Valuations will be decided closer to the deal signing, but of course, the deal is definitely going to be a part cash, part stock deal is what we are given to understand. Now, as far as the synergies of the deal are concerned, it could be a win-win for both the companies. As far as Amazon is concerned, they could look at setting up a separate microsite for future retail brands, while Amazon experience zones could be set up in several of the future retail stores across the country. In fact, we did reach out to the companies concerned, and future retail did not respond to our query, while Amazon said that it did not want to comment as far as our query is concerned.
Okay, now that's a very big story, and of course it's been around, it's been doing the rounds, but looks like the deal is now close, Amazon in future retail. There are some questions that we've got our way. It's tweeted to us by Sagar Munnot. He has 2,000 shares of future retail, which he bought at 605 rupees a share. He wants to know if he should continue to hold or sell. Prakash, you go first.
Yeah, I think it's a hold. So that's the only company that you should be positive on within this whole hype that's surrounding the entire Amazon deal, because, I mean, I saw during the day so many other future stocks flying off the handle. Yeah, I mean, future market networks, for example. I mean, Amazon would not touch it because they have their own expertise to manage that. And then, of course, you had, you know, some of the shopper stops and trends of the world also joining in the party. But future retail is the name that you need to look at and watch out clearly for. The other rub-off benefit could also be from future consumer enterprises, which is the branded play of the future group, and that could also have a big impetus once the retailing thing has some capital infusion, which hasn't happened for a long time within the future group. So quite positive on that. So keep on holding. You'll get a price, and it probably start becoming a good story. Don't get worried with the DMart numbers softness, which has been a bit of a concern for this entire sector since the numbers came out.
Okay. Well, Mitesh, any thoughts on future retail, positional, 1 month, 2 month, 1 quarter?
Yeah, so I think, Lata, for me also, I think the stock has made an important low around these levels of 420.30, and I think has got into short-term uptrend. With today's bar, maybe, you know, you might see a couple of days of consolidation, but I think in the short term, the stock is very likely heading towards targets of around 590, which is very close to the gentleman's buying price. So I think at least hold on till then, and then from there you can assess afresh. Okay.
Mitesh and Prakash, thank you very much for joining in and answering questions of all our viewers. And with that, we wrap up this edition of Markets Today Talk Back. Thank you all for watching.